Amazon stock is absolutely flying higher right now. It's not every day that you see a $1.5 trillion market cap company up over 10% in a single day. This is on the back of their Q2 earnings that they just reported yesterday. We're going to dive into the numbers today, talk about why the stock is moving up so big, and most importantly, what am I doing with Amazon stock moving forward. But before we get into all that, if you're new here, I'm Austin. Thank you for being here. I'm a co-owner of ClubSuite.com. I'm a stock market investor, and most importantly for this video, I'm an Amazon shareholder. I started buying at the end of 2022 into the beginning of 2023, and I actually haven't been a buyer for about 2 months. I thought that we were going to get some more share price depression in the short term so I could pick up more shares. In retrospect, I wish I would have been adding a little more aggressively, and I wish I would have kept buying over the last 2 months, but you can't win them all, I guess. Real quick, the channel's sitting around 1,400 subscribers. If you're back and you're one of those people, thank you so much for being back. If you're not subscribed yet, go ahead and click that subscribe button and drop a like for me. It seems to help out the videos in a big way. And as a thank you for doing those two things, here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. They thank you for subscribing. And if you've been keeping up with the Luna update, she was actually in the ER. She was in the ICU over the last few days, and we believe that we're going to be able to bring her home today, which is Friday. So that's obviously amazing news. I'm very excited for it. I can't wait to have her back to normal and back to healthy. It's going to be a little bit of a long road to recovery, but we'll do whatever it takes. Okay, now that we've got all that out of the way, let's talk about Amazon stock. Amazon stock is up 65% on a year-to-date basis, with 10% of that coming just today alone after they reported Q2 earnings yesterday after the bell. And it looks like we're on track to hit a 52-week high with Amazon. Like I said earlier, this is a stock I started buying at the end of 2022 and the beginning of 2023. I haven't been buying for the last 2 months, but I wish I would have added more. Right now, this is a 4% allocation as it relates to my cost basis. And since my position's up over 50%, it's more like a 6% weight in my total portfolio. But we'll talk about what specifically I'm doing with my shares toward the end of the video. So let's start with the headline numbers. As it relates to sales, they were up 11% on a year-over-year basis, up to 134 billion, with North America sales having increased 11% year-over-year, international sales up 10% year-over-year, and AWS up 12% year-over-year. Operating income is up well over 100% on a year-over-year basis, up to 7.7 billion, and that's compared to 3.3 billion a year ago this quarter. Contributable income from the three different business segments would be 3.2 billion from North America sales, a loss of 0.9 billion from international sales, and then 5.4 billion from Amazon Web Services. AWS is such a massive profit machine for this company. It's absolutely insane. When we take that 5.4 billion divided by 7.7 billion, multiplied by 100 to get a percentage, that's almost 72% of all the profit comes from the AWS segment. That's absolutely insane. This is really that Trojan horse of Amazon that brings them an insane amount of profit. That said, AWS operating income was actually down 300 million on a year-over-year basis as it relates to Q2 of 2022. The loss on the international segment of Amazon is actually down half in comparison to the year ago quarter. 1.8 billion was the loss last year in Q2. 900 million was a loss Q2 of this year. That's good progress. We obviously want to see the international side of the business also be profitable for Amazon, not just the North American business and not just AWS. Speaking of the North American segment, 3.2 billion of operating income this quarter as compared to a loss of 600 million in the second quarter of last year. So that's like a 400% increase, swinging from a loss to a profit in the North American segment. So that's great to see. Checking out net income. One thing I was talking about in my earnings preview video for this week, I was talking about all types of different companies. Amazon was one of those companies. I thought Rivian was going to be an insane boost to the EPS numbers and the net income numbers, but it was actually only a little bit. There was a pre-tax valuation gain of 200 million as it relates to their Rivian ownership. If you didn't know, Amazon owns a very large stake in the EV automaker Rivian. And in GAAP accounting, even if Amazon doesn't sell shares of Rivian in the quarter, they have to account for the gain or loss, even if it's a paper gain or loss and there was no sale of security, something called a pre-tax valuation gain or pre-tax valuation loss. Since Rivian had a lot of depression and a lot of pain in the last few quarters, Amazon was taking big losses as it related to the Rivian position on a GAAP basis, but now they're taking a $200 million gain because Rivian's seen a nice upside in the share price. I love that I can own Amazon shares and get exposure to Rivian. I personally don't want to own Rivian shares straight up. I own Tesla shares straight up, and I don't really want to own Rivian because I actually do see a lot of risk in the Rivian situation, and the valuation has never been in a spot where I wanted to open a position, but it's cool that I have exposure to, in my opinion, what's going to be the number 2 EV company in the entire EV game. Net income on a year-over-year basis was up $8.7 billion, all the way up to $6.7 billion, and that equates to 65 cents per share. Pretty much all these comps are absolutely insane because mid to late 2022 was such a trash time for Amazon, and that's why the stock got disrespected so much, and it was a great time to pick up shares at the end of 2022, beginning of 2023. Operating cash flow is up 74% on a year-over-year basis. Free cash flow is up a disgusting amount. They had an outflow of free cash flow of $23.5 billion a year ago, and now they had an inflow of $7.9 billion this year. Andy Jassy's summary of the quarter was absolutely beautiful. Check it out right here. It was another strong quarter of progress for Amazon, said Andy Jassy. We continued lowering our costs to serve in our fulfillment network while also providing Prime customers with the fastest delivery speeds we've ever recorded. Our AWS growth stabilized as customers started shifting from cost optimization to new workload deployment. That's massive. He's basically saying customers were trying to cut costs, make it as cheap as possible to use AWS, and now they're going ahead and investing more into AWS, using AWS for more things and expanding the amount of money that they're spending with AWS. That's basically what he's saying here. And then he goes on to say, and AWS has continued to add meaningful leadership position in the cloud with a slew of generative AI releases that make it much easier and much more cost effective for companies to train and run models, customize large language models to build generative AI applications and agents, and write code much more efficiently with Code Whisperer. We're also continuing to see strong demand in our advertising side of the business. Just take a look at Meta and Google. Advertising is an absolutely insanely profitable business. I'm glad Amazon is continuing to grow their advertising business more and more. They announced tons of new commitments and migrations from AWS customers. Check out it here. Omnicom, Royal Philips, 3M, Old Mutual, Experian, so on and so forth. And these are not just American companies. These are international clients from Argentina to Spain to South Korea, etc. So I think it's safe to say AWS is back to growth. Yes, the operating income dropped a little bit on a year-over-year basis, but I don't expect that drop in operating income to continue. I see a massive increase in operating income as we move through the rest of 2023 on the AWS segment. Pretty much one of the only things I didn't love about this earnings report is not a new thing for me, which is the balance sheet of Amazon. I understand this is an asset-heavy company, which means the liabilities line is going to be larger than it would for other type of big tech companies that are almost pure software plays. Since Amazon has a huge logistics side of the business, there's a lot of PPE, there's a lot of lease obligations, there's a lot of long-term debt with this company so that they can continue to grow and grow and grow. But cash and cash equivalents actually dropped when we look at 6 months ago, end of 2022 to the end of Q2 of 2023. Cash and cash equivalents dropped by about $4 billion. Marketable securities dropped by about $1.5 billion. Inventories were up a little bit. Accounts receivable were down a little bit for a total assets drop of $6 billion from 6 months ago. And that's on that current assets line. All non-current assets are up nicely, which makes the total assets line actually increase about $15 billion on a 6-month basis comparing to the end of 2022. There's a lot of long-term liabilities, like I was talking about a second ago. Long-term lease liabilities went up by about $3 billion. Long-term debt, this is nice to see, dropped by about $4 billion. We'd love to see that. And then other long-term liabilities increased by about $600 million. I'm glad they're using some of that cash to pay down that long-term debt, especially in this high-rate environment time. I want to see that continuing over the rest of 2023. I know that Amazon just swung to a massive profit, and they can easily fund their operations from their income from operations, so I'm really not worried about it, but I would like to see the balance sheet in a better spot for me to feel more comfortable as a shareholder of Amazon for the long term. I would say the margin story is back and the net income growth story is back with Amazon. That's evidenced by the supplemental financial information. Check it out right here. Looking at Q2 of 2023, looking at all the different business segments. Online sales up 5%. Physical stores up 7%. That includes 365 stores. That includes Whole Foods. Third-party seller services up 18%. Subscription services up 14%. Advertising services up 22%. AWS up 12%. And then other up 26%. And that other includes financing and leasing of video content, healthcare services, shipping services, and co-branded credit card agreements like the Amazon card that they have through Chase. So all the high margin business segments like third-party seller services, subscription services, advertising services, and AWS are up massively, and they're up way more than the low margin business, which is just the e-commerce retail side. We know that retail is not an amazing margin business, but we know that the software side of Amazon is absolutely insane. We looked earlier at operating income. It's over 70% of their total operating income, specifically this quarter, was just from AWS. So Andy Jassy is doing an amazing job of bringing AWS more into the limelight. It's their lowest business segment in terms of total revenue, but it's their highest business segment by almost 2x as it relates to operating income and net income. So overall, I think Q2 earnings for Amazon were very positive. I'm super excited about everything I saw. The only thing I didn't like was the drop in short-term assets on the balance sheet. But other than that, this was an absolutely insane quarter. And I think Amazon's margin expansion story is back. Let's see how it goes through Q3 of 2023 and Q4 of 2023. But I think it's only going to get better from here. And that operating income decrease is actually going to swing to an operating income increase on the AWS side of the business. We'll see how it all plays out. But the commentary Andy Jassy provided in the paragraph we read earlier was very positive as it related to AWS and specifically AI applications. So right now, Amazon's about a 6% weight in my portfolio. In terms of cost basis, how much money I put into the stock, it was about 4% of my total portfolio. I wanted to be putting cost basis 8 to 10% and then let it ride from there. I didn't get to that point. I haven't bought an Amazon share in about 2 or 2.5 months. I do think I'm going to continue buying Amazon. It's not a heavy buy for me anymore. There are better opportunities in the market right now, in my opinion, but I'm going to have to swallow my pride a little bit. I do have more than a 50% gain on Amazon shares already, but I only see growth forward as it relates to margins with Amazon and net income with Amazon. And I know that stock price follows earnings in the long term. So as I see these earnings metrics get better and better for Amazon, it's really hard for me to not continue to pick up shares. I'm probably going to keep nibbling. It's not a massive buy, like I said, but I am going to keep on buying shares maybe once a week, anytime we see any kind of short-term weakness. Let me know in the comments if you're a holder of Amazon, if you're looking to get into Amazon. Are you a buyer right now? Are you a seller right now? I want to hear about it. Let me know in the comments down below. Where do you think Amazon's going to move over the next 6 months? And what are you doing with your Amazon shares if you own any already? That's one of my favorite parts of posting here on YouTube is seeing the comments down there. There's always some strong takes. I like to hear the agreements. I like to hear the disagreements. Let's have some conversation. Let's talk about it. If you enjoyed the video, go ahead and like the video. I appreciate you being here and have an amazing day.